So let's get into the buy one, hold one, dump one segment of the show. And Coach Greg, let's set this up a little bit here. We've been doing it for about a month and a half. I can't remember exactly the very first time we did it. It's a fun little premise. Coach Greg is a long-term investor. We call him Old Money Homes for a reason. And he brings 3 different companies to the show to, show us some fundamentally sound ideas, whether they're dividend plays or whether they're within a sector or a theme or a space. That's up to Greg on what he wants to find that week. And then we get to decide as the coaches, we're the judges this time, which one we would buy, which one we would hold, and which one we would dump and throw it into the trash can. So Greg, you're up. What do you got for us today?
Well, this week I'm trying something a little bit different. I'm churching this up a little bit. So typically we've been kind of looking at value and obviously the fundamentals, and we're still going to look at that. But what we're going to add in a little bit this week is we're going to add into a little bit of growth data as well. And we'll see if that changes any tunes when it comes to picking certain things. Now, this week's picks are in celebration of XLB and how well it's doing, the material space this week. So I think it actually looks like one of the better setups overall. I picked out 3 in the specialty chemicals area. So they're a little bit higher dollar stocks, but fundamentally we've got some solid stuff to go with it. We've got some growth numbers as well. And we're just going to buy one, dump one, and hold one. So without further ado, I've got some data here. I'll just read them off. Let's go, Tyler, with PPG first. If we'll do the technical read, and then I'll read off the data that I got here. So had a little bit of a pullback, really not that much with what we saw there. Came right down to the 20, as you can see there, kind of stuck the landing, and it's trying to claw that back today. Really good post-earnings gap after that. Not filling that gap anytime soon by the looks of things. Just a really solid chart here as far as I'm concerned. That bounce off the 20 looks pretty attractive for this one. So PPG from a fundamental standpoint, what I did was I picked up just a bunch of metrics here. So I'm going to give you the price, the dividend yield, the dividend increases, the year they started it, the payout ratio, the price to earnings ratio. I'm going to give you sales growth for the year and projected sales growth for next year. And that'll be the criteria that you guys get to choose from. So PPG is about $173. Not sure what it is right now. What do you guys got there? I can't see that price. 177. So it's up a little bit, obviously, today. So when I did this, it was a little bit down earlier. So dividend yields 1.24%. 49 years in a row, they paid consecutive dividend increases. They started paying dividends in 1899. Their current payout ratio is about 43%. Their PE ratio is 35. Now, the sales growth numbers that you guys can take into account, they're at 19.9% sales growth for this current year, and their expectation next year is 5.9%. Okay, so that's your criteria to kind of whittle down the stock to see which ones you like. So that's PPG. So the next one we're going to do is APD, also in the same space, Air Products and Chemicals. So a little different chart here, recent breakout, kind of high basing again by the looks of things, but not back at those highs like we saw with PPG. Just, kind of lagging a little bit, it seems, but just went through earnings. Not too bad on the earnings by the looks of things there. Just not being able to reach those previous highs we saw back in November. So chart wise, more neutral than bullish as the last one we looked at. So APD, their numbers stack up like this. You guys can see the price there. I've got about 293, is probably a little different than that. Their dividend yield is 2.05%. 38 years of consecutive dividend increases. Started paying dividends in 1954. Their payout ratio is 65%. Their PE ratio is a 34. Current sales growth is 11%, and their sales growth next year projected is 8.1%. All right. So that's the second choice. And then the third choice is Sherwin-Williams, SHW. So all big dollar stocks, they're all in the same space, specialty chemicals. Similar businesses, not the exact same, but similar businesses. Obviously, you can see what's happened here. Very strong, nice little 3-day pullback there, just blasting off again today, actually above the high from yesterday. So a pretty decent retracement here on this one, showing lots of strength with this one. Numbers wise, it looks like this. Dividend yield of 0.79%. 41 years of consecutive dividend increases. Started paying dividends in 1971. Great year. Payout ratio of 73 and a PE ratio of 109. Their sales growth currently is 8.1%, and their expected sales growth next year is 4.7%.
And
so those are your numbers, gentlemen.
Real quick on that PE ratio on Sherwin-Williams. I had consistent numbers on the other two. I have different on that one. Tyler, can you look up the PE for Sherwin-Williams so we can have consistent analysis on that?
I took the PE numbers from the same place. So if they're wrong,
always,
it is what it is. Yeah.
Measure twice, cut once, right? It's always good to look it up. Yeah, I've got it a couple locations, about 36.
I have a 36.
Yeah, I got a 36. So 36 PE on Sherwin-Williams. Okay. And what was the sales growth projection you had on Sherwin, Greg? Real quick.
Sherwin was currently is 8.1%, so that's this year, and next year they're expecting 4.7%.
Okay, all right. Back on the chart. Who wants to go first here? I'll go. I personally, looking through the data, looking at some of the fundamental metrics and considering the charts as we were going through 3 of these, I like the fact that 3 are in the same sector here, Greg. It's going to make it, for some of that analysis where you can cross compare. I've got a dump. I'm going to start with the dump, and I'm dumping APD. I understand the dividend payout is a little bit higher. I understand it's got a little breakout potential here. That $300 breakout, even on the daily chart, might be in play, but it's been underperforming relative against the other two for quite some time. Relative PE ratio, relative sales number. The dividend's not going to be enough for me to take that chart over the other two. Okay. So it comes down to the other two for me in terms of which one I would prefer to buy and which one I would hold. And I think what I would do is I would hold the first one, PPG. Give me the chart on PPG. The dividend ratio 1.24 is not that much higher than Sherwin-Williams, but it is about a half tick higher than that. There's a little subtle rolling over there. Breakout is definitely still in play. I see it, but I liked that Sherwin-Williams chart as a buy the most personally, just from a technical perspective. Fundamentals seem to be very much in line with each other in many regards. I can't wait to hear what the other guy's seeing in that because I'm not seeing a huge difference. But the Sherwin-Williams chart on the daily, I like the retracement. I like the price response. And with the other things intact, this one has been a leader in terms of performance and trend. So I'm buying Sherwin. I'm holding PPG. I am dumping APD. Matt, let's have you go next.
I was hoping Greg would pull up my favorite chemical company. I'm gonna hold Sherwin in this example. I'm gonna hold Sherwin. It's a popular brand name, highest market cap company in the U.S. in the chemical space. The 36 valuation is slightly high for the chemical space, but not to the point where you're concerned fundamentally, and not against some of the chart concerns I have on APD, which means I'm dumping APD just because it would be a little bit more difficult to manage from a technical perspective, which I personally like to do. So I'm going to dump APD, and the technical trigger on PPG above 180 looks pretty legit. On that, but I'd be looking at that more as a swing trade from a breakout perspective. So looking at that as a buy. Sherwin's a hold for me, APD's a dump, and PPG is a buy. My favorite one though is LYB. It's fundamentally, to me, head and shoulders above the rest.
Mm-hmm. Mm-hmm. Tyler, what about you?
I think with Tim, I like the interesting thing on the dividend yield. This is why it's a little misleading if you look at just the yield. I mean, you'd say, oh, APD is 2.05% yield. Sherwin-Williams only 0.79. If you looked at that in a vacuum, you'd take APD. But the reality is, part of the reason why Sherwin has the lower yield is because its stock price has done so good, right? And so sometimes you look at yield to the exclusion of growth, and you'd be better off looking at total return. So I don't take the lower yield on Sherwin-Williams as a negative. I think it's just a byproduct and a reflection of how good the growth has been. I love this long-term chart too. I mean, you just had a 3-for-1 stock split. So I mean, this sucker was $750. So you think it's high now? Imagine had it not split. So I like the story. I like the name brand that Matt mentioned. Sherwin-Williams to me would be the buy. And PPG, I like the long-term chart as well. I think it's easier than APD would have been. So yeah, I'm whole PPG, buy Sherwin, and dump APD.
All right, Greg, what would you do? I mean, now this is always the fun part of the segment at the end. How do we do? Do you agree with us?
Not exactly. I do agree on some points and others. The reason I wanted to throw in the sales growth data to kind of church this up a little bit was just because I kind of had a feeling how you guys would look at this, from a certain perspective, because I know you guys are very much consider growth in all your decisions and things like that. And so that's kind of why I wanted to bring that little extra aspect to it. Now, obviously, I like all of these companies. They've shown some strength. I actually like APD for a couple of reasons. Obviously, their dividend yield is higher. It's not great, though. It's not like you're shooting the lights out. But what I did find interesting, and you guys did point it out, was, their chart isn't as attractive, right? But as far as I'm concerned, I think they've still got more room to run. Like I said, I feel like they're looking at for a breakout of the 300 there, where we're sitting right now. But even their sales growth projected next year, this year they had a little bit better sales growth than APD, than Sherwin, I should say, which obviously is reflected in their stock price already. Same thing with PPG, had a very good growth this year, but the projection going forward, and again, you have to take that with a grain of salt because they're just projections. But you can see that we're almost double what Sherwin-Williams is expected. So when you start looking at the stock prices, okay, if some of that growth is realized, then I think you could get a better run, and you'd still be collecting that higher dividend. So for me, I would hold APD. I do like Sherwin-Williams, but I'm a little bit concerned that maybe it's gone a little too far. And if I was looking for a growth component, I would probably stick with PPG. Like I said, I do like their dividend yield is somewhat decent. They've got they meet all the fundamental metrics for me. Plus, they had good sales growth this year. It looks like they'll have some decent sales growth next year. And for me, that would be my buy. And then I would have to dump Sherwin-Williams just because I kind of feel, like I said, they've run really, really well. As Tyler said, they stock split, which they could go back to 700 very, very easily. But I think that's the one I would dump out of this bunch.
It's not surprising to me that the old money Holmes likes the dividend play, the higher dividend yield. I get it. But obviously, a difference of opinion on that one, Greg. That's okay. That's why we buy one, hold one, dump one. We all got our own take on it. So thanks for bringing those three stocks to the show and the analysis here. Much appreciated as always. And out there, Team Tackle, always curious what you guys would do. Which one would you buy? Which one would you hold? And which one would you dump? Let me know in the chat. Guys, that's it for our show here. On
very quickly.
Yeah, sure.
Just very quickly on the chemical space. Love the chemical space, Greg. Thank you so much for the conversation. Chemicals have been really hot. Just want to remind people, the best chemical company is the one on dividend fireworks, and that is LYB. Even despite the very consistent trend, fundamentally, LYB still has very, very proper valuation.
It's a beautiful little pattern too, developing actually.
Yeah, I didn't see that one. Otherwise, it would have made the list.
Yeah, LYB is the most consistent for me from a cover call perspective, and it's in a price threshold that's probably a little better for cover calls too.
Yeah,
for sure.
Yeah. I'm going to drop the link to the Tackle 25 list there for Pro members in the chat, so you guys can go and review some of those dividend fireworks, including LYB, which is right there on that list.